Hey guys, in this video we're going to talk about the 5 stocks in my Wealthsimple portfolio that I'm currently down on. If you like this type of content or stock market content in general, please subscribe to the channel in the bottom right corner. Like the video. If you own any of these stocks or have any thoughts on them, I'd love to hear from you in the comments, but we're just going to get into this video here. So the first stock is AT&T. AT&T is a stock that I'm down on overall in every account that I hold it in. But currently in my Wealthsimple account, I am down about 8%. Now, I do get 5-6% a year in dividends on this stock, but all in all, still hasn't been performing well. I've actually owned this one for maybe 3 years or a handful of years. So I've had losses even prior to this year. And this is just one that hasn't been performing overly well. But honestly, looking at their earnings report, I think they're going to earn like $2.50 a share. So all in all, I think the company's trading at an attractive 8 times earnings value. They have to focus on repaying debt. They're going to continue paying their dividend, hopefully invest in some top line growth opportunities. So this one isn't a huge position for me overall, but it's one that I am going to stand by. And, as long as I feel strongly about their ability to continue delivering that 250 a year in earnings, I consider even nibbling on a bit more of this to make it a bit bigger of a position. But, not enough appetite to make this a huge position for me for sure. Going into the second stock I am down on, it is Google. So Google shares are a pretty big position in my portfolio, a top 10 holding. And I just started buying them in Wealthsimple as like a mechanism of taking advantage of the dip in the stock price over the past year. That's down 30%. With that being said, my average price is about $100 a share. So I am down on it still, even though I've been averaging down within this account. This is one that I will likely continue to buy more of and average down farther because I think that Google trading at under a 20 times earnings with all the cash they have on hand and all the opportunities that they have, they're just really well positioned in digital advertising. They have YouTube for video, they have search, which I know there's a lot of concern around Bing and AI and stuff like that, but I think it's a long way down the road and Google will defend against it in some way. So I'm looking to buy more on this weakness. And this is one that's down, but if it goes down farther, I'll probably continue to average down and get this position in my Wealthsimple portfolio to be much larger than it is right there. The third stock that I am down on in my Wealthsimple portfolio is Allied Properties. Allied Properties is a real estate company. About half of their income comes out of Toronto. The rest is spread across major cities in Canada. The vast majority of their income, let's call it 3/4 or so, is from office. So that's the main reason why their stock's down so much. And then they also have some diversification in retail, which is about 10 to 15%. And then some data centers, some urban data centers that they own, as well as 3 or 4% parking revenue that they're just holding before eventually developing it in downtown cores. So the stock makes about $2 to $2.50 a year in funds from operation. And that really hasn't changed over the last number of years. So the stock's trading at kind of like let's call it like a 14 times multiple. And the earnings story hasn't deteriorated, but the multiple has. So Allied owns a lot of prime flagship downtown Toronto, downtown Vancouver, downtown Montreal real estate that was trading at like 30 times before COVID. And now that there's a lot of concern on what the future of the office real estate segment is going to look like in Canada, but really in the US and everywhere else, the multiples investors are willing to buy that real estate for has just gone down. So you're seeing now the stock trade at a much more reasonable valuation, but we're not seeing a decline in their operating income or anything like that, which is what would concern me more. So the stock's now paying a 6% dividend for really strong assets. And it's at a spot that I don't want to make it like a huge portion of my portfolio. It's still office real estate. I still want it to be, at most a mid position for me, but I do find it attractive at these levels. So I have been adding a bit more. I have been averaging down my cost basis in Wealthsimple, and I'll probably continue to do so. I'll collect the 6% yield in the meantime, and hopefully down the road the office market bounces back, or they continue to diversify away from offices in some of their other endeavors that they're working on. The fourth stock is Northwest Healthcare Properties REIT. So this company owns offices, owns hospitals all over the world, lots of medical buildings in Canada, but they also own hospitals in Brazil, Australia, Europe, stuff like that. They just made an acquisition in the US as well. And this company, honestly, I need to look into it a bit more, but unfortunately, at least to me, they've taken on a lot of different growth vectors. They're looking into a lot of life sciences spaces. They also have a property management division that they're actively growing, and that really screws with like the quarterly performance in terms of the recurringness of their revenue models, and just like atypical for what a REIT usually provides. And it's making it hard to kind of read what their true earnings outlook is and stuff like that. But from the prior work I did on the company, I think their net asset value was 13 to 14 times. They have taken on probably more debt than the market wanted because they did do a US acquisition. And I think that's part of the reason they've gotten bid down here. But I'm comfortable continuing to hold it. They pay a whopping 8% dividend at these levels. And lots of their leases are inflation hedged, inflation adjusted, and paid out by governments. So very reliable tenant base on their hospitals and stuff like that. And as the world ages, baby boomers and everything else, I think their real estate is pretty well positioned. And it's not like Amazon can really, you know, break into these spaces and disrupt these spaces in the same way as typical retail. So it's one that until they get their debt a bit more under control and stuff like that, I probably won't be doubling down on it and betting the farm on it. But I'm comfortable with the position I have. I'll take my 8% dividend, either reinvest it in this stock from time to time or other opportunities across my portfolio. But yeah, I am down 25% in Wealthsimple. So a pretty big number there given the size of that holding. And the fifth and final stock is Canadian Apartment REIT. So Cap REIT, I'm down about 6%. This is another one I do get like a 3% dividend from, so some of that's offset. But all in all, I'd say the company's been doing fine. It's just a lot of macroeconomic headwinds, interest rates going up, obviously, as devalued property prices, as well as lots of other factors in the Canadian economy. Makes analysts think that less people may be moving out as fast. Some people may be moving back in with their families. One interesting thing in Canada that's less true in the US is lots of people live within 30 minutes or 45 minutes of where they grew up, generally speaking. So it's lots of things like during the pandemic that while in the US someone may be moving cross country and not really have access to their parents' houses and stuff like that, lots of people gave up their leases during COVID, moved back into with their family, saved money because they weren't really hosting people as much, or they didn't really need the space for a number of reasons. Or some people just lost their jobs and they didn't have the opportunity to pay their own rent. So they would just easily move back in. And I think they haven't fully recovered from that. In a sense, they were giving out a lot of freebies in order to get people to move back in to cover the space. But ultimately, this is the best residential real estate company in Canada, the largest one, and they're run really well. They have presence across kind of different tiers of residential rental real estate, and they're trying to build out their newer buildings as well to further diversify their exposure. And this is one that I'm comfortable holding and even adding to on weakness. I was adding to it in the low 40s. It looks like it jumped about 20% since then, even though their earnings report isn't until next week. So a bit more reluctant now until I hear their report. but it's one that I'm not scared to invest in just because I'm down 5 or 10%. So those are the 5 stocks out of all the companies in my Wealthsimple portfolio that I am down on. If you like this type of content, or if you own any of these stocks, let me know in the comments. Please subscribe to the channel if you like stock related videos. Let me know what stocks you're interested in. Would love to see it. Would love to maybe make a video on some stocks you're interested in. And thank you guys for watching till the end if you're still here, and I'll see you guys in the next one.